Good morning investors. Today we are going to see SBI Magnum Income Fund. Before this video we saw SBI Long Duration Fund. It was a debt fund and it was made for long-term capital appreciation as well as capital growth. So today we are seeing SBI Magnum Income Fund. It is a medium to long-term capital appreciation fund and it is also a debt fund. So if we see for whom it is suitable for, it is suitable for medium term, that is for 1 to 3 years of investments. The minimum initial lump sum amount for this fund is 5,000 rupees and the minimum SIP amount is 0 rupees. So you can start with any amount with this fund. And if we see the age of this fund, the age of this fund is 27 years and returns in the inception of this fund is 7.55%. And if we see the risk rating of this fund, it is moderately risky. On the day of today, the asset under management of this fund is 2,171 crores and the NAV as of today is 71.6. So if we click here and see the details of this fund, we will get to know the scheme objective of this fund. The objective of this fund is to provide investors an opportunity to generate regular income through investments in debt and money market instruments, such that the Macaulay duration of the portfolio is between 4 and 7 years. So your money would get doubled in 4 to 7 years. And if we see, but there is no guarantee or assurance that the investment objective of this scheme will be achieved. So there is no guarantee that your money will get doubled in 4 or 7 years, but it can happen definitely. The scheme doesn't assure any guaranteed returns. So there are no guaranteed returns for this scheme. If we see the benchmark of this fund, it is the SEEK index and the launch date of this fund was 25th November 1998. Expense ratio of this fund is 1.50% and if we see the exit load, for exit within 1 year, it is 10% of the investment and for exit after 1 year, the exit load is nil. So if we see the returns since inception, it is 7.55%. Return of the last year is 6.4%. From the last 3 years, we got a return of 7.46% average annually, and for the last 5 years, the return was 5.67%. If we see the graph of this fund in the 1 year segment, so the graph is pretty up and down, but the ups and downs are very less. And if we see the graph for the last 3 years, you could see it is a pretty straight graph, and for the last 5 years, it would be definitely be more straight than that. The risk rating for the benchmark of this fund is moderate, but for this fund it is moderately high risk. And if we see the strategy of this fund, the scheme will invest based on the evaluation of macroeconomic factors, market dynamics and debt issuer specific factors. The scheme will invest its corpus in the entire range of debt and money market securities in line with investment objectives to provide attractive risk-adjusted returns to its investors through active management of credit risk and interest risk in this portfolio. So entirety of your money will get invested in debt and money market instruments, and you will get a risk-adjusted return for your investments. But what it will do is it will manage the credit and interest rate risk of its portfolio. So who is the fund manager who will be managing your fund? Mr. Mohit Jain will be managing your fund. Mohit Jain joined SBI FM in 2015. Before joining SBI FM, he was working as a senior research analyst with Crisis Limited. He is a graduate in engineering from Satyabama University and has completed CFA level 3 from CFA Institute, USA. So he has taken his education from USA and he has worked in Crisis. He is managing this fund since July 2025. So he is a new fund manager in this fund. If we see the portfolio breakout of this fund, where will your money get invested in this fund? So 39% of your money will stay with Government of India, 7% will be with NABARD, 6% of your money is in cash, 4% will be invested in Bharati Telecom, 4% in Godrej States, and 4.5% is with state government of Bihar, 3.61 with Torrent Power, 3.29 with Renewable Solar Energy, Jharkhand government, 3.26 with HDB Financial Service, 2.82 with JTPM Metal Traders, 2.7 with Motilal Oswal, 2.7 with HG Infra Engineering, 2.5 with Avans Financial, 2.3 with Tata Power Renewables, guaranteed by Tata Power Limited, 2.3 with JM Financial, 2.3 with Shivshakti Securitizations Trust, 2.3 with Siddhivinayak Securitization Trust, 1.7 with NH National Highway Infra Trust, and 1.16 with Aadhar Housing Finance, and 0.52 with JM Financial Asset Reconstruction Company Limited. So these are the companies in which your money will get invested. And if you see the sector allocations of this fund, so 43% is with the sovereign, 24% with financial services, 9% is invested in power, 6.4 is invested in services, and 6% is in cash. If we see the performance of this fund in line with the benchmark as well as the additional benchmark, it has underperformed both of them. And if we see what would your 10,000 rupees of investment would have become if you had invested in this fund for before 1 year. So before 1 year, if you had invested in this fund, then your 10,000 would have become 10,640. If you had invested 10,000 before 3 years, your 10,000 would have become 12,412. And if you had invested 10,000 rupees before 5 years in this fund, then your money would have become 13,183. And if you had invested rupees 10,000 before 28 years, that is in 1998, then your 10,000 rupees would have become 71,050 rupees. So that is the performance you would get in this fund, and definitely you can get this performance if you want to invest now or in the coming days. You can contact with me. I am MD Imtiaz Jalam, and I am an AMC registered mutual fund distributor. My